Hello and welcome back to Explain the Charts. Today is October 14th, 2025, and we are breaking down one of the market's most important stocks, Microsoft, ticker symbol Microsoft. We're going to start by covering the recent news and events surrounding the company, and then we'll dive deep into the charts to see what the price action is telling us. The current news landscape for Microsoft is presenting some very mixed signals for investors. On one hand, we have positive headlines surrounding fresh AI partnerships and strong Azure cloud adoption, which paints a very bullish picture. There's also a notable analyst from Mizuho who recently called the stock free money near the $515 level, expressing strong confidence in a rebound. He believes Wall Street is overreacting to concerns about Microsoft's cloud unit potentially losing business from its key partner, OpenAI. However, balancing this optimism are significant legal and competitive risks. Microsoft is facing an antitrust lawsuit related to its OpenAI deal, which is creating a cloud of uncertainty over the stock. This intensifying regulatory scrutiny is a major headwind that traders cannot ignore. The broader market context is also important, with the S&P 500 just marking the third anniversary of its bull market, suggesting general strength. So, we have a fascinating backdrop of bullish fundamental drivers clashing with serious regulatory threats. Now, let's see how this complex narrative is reflected in the price charts. Looking at the daily chart for Microsoft, we can see the broader story of the past year. The stock had a powerful uptrend that culminated in an all-time high of $555.45 back on July 31st. That high is now the key long-term resistance level that bulls are ultimately targeting. On the flip side, the 52-week low sits way down at $344.79, which was hit during a sharp sell-off in early April. A pivotal moment occurred on May 1st, where we saw a massive price gap up, likely due to a strong earnings report. The stock jumped from around $395 to open above $430, creating a significant support zone that could come into play if we see a major correction. Let's focus in on the dramatic price action from this summer. Here you can see the enormous gap up on July 31st after earnings, which immediately marked the peak before a sharp reversal. The price then fell dramatically throughout August, finding its footing just above the $500 psychological level. Notice that the low point of this correction came very close to filling that earnings gap, testing the high of the previous day's candle around $515. This price action tells us that the $515 area is a critical pivot point for the market. Zooming back out to the full daily chart, let's look at the price action since that August low. Since then, Microsoft has been trading in a broad consolidation range, generally between $500 on the low end and $535 on the high end. This shows a period of indecision in the market as traders digest the post-earnings valuation and the conflicting news. We have a very clear support level that has formed between $500 and $505. This level was tested and held firmly in early September and again just last week in early October. On the resistance side, the $530 to $535 zone has capped every significant rally attempt since the August drop. The stock is currently trading near $514, right in the middle of this range and very close to that analyst's target price we discussed earlier. This positions the stock at a crucial decision point. A breakout from this multi-month consolidation range could trigger a substantial trend in either direction. Now, let's switch to the 1-hour chart to get a better look at the short-term picture. Here we can see the most recent test of the range highs around $530 back on October 6th. That move was likely driven by the positive headlines about new AI deals. However, the stock failed to break out and has since been in a steady downtrend over the last week. This price action has formed a clear downward channel on the hourly time frame. The stock found a temporary bottom yesterday, October 13th, at an intraday low of $511.68 before bouncing slightly into the close. That low is now the immediate support level to watch. For a short-term bullish case to build, buyers need to push the price above the recent resistance in the $520 area. A break above that level could signal an end to this pullback and a potential retest of the $530 range high. Conversely, a break below yesterday's low of $511.68 would be a bearish continuation signal. This would open the door for a test of the major support level down at $500. Drilling down even further to the 15-minute chart, we can analyze yesterday's trading session in detail. Yesterday, October 13th, showed a clear bearish sentiment for most of the day. The stock opened near the high of the session at $516.41 and proceeded to sell off steadily. The selling pressure continued for hours, eventually finding the daily low at $511.68 in the afternoon. We did see a small but notable bounce in the final hours of trading, allowing the stock to recover and close at $514.05. This late-day recovery prevented a much weaker close and shows that some buyers were willing to step in at those lower levels. However, the overall intraday trend was firmly negative. The key for today's session will be whether the stock can hold above that $511.68 low at the open. If it fails, we could see an acceleration of yesterday's downward momentum. Okay, let's switch back to the daily chart to recap and discuss our outlook. The key price levels to watch are clear. To the upside, we have minor resistance at $520, followed by the top of the range at $535, and then the all-time high of $555. To the downside, immediate support is yesterday's low of $511.68, followed by the major consolidation support zone between $500 and $505. Let's outline the two primary scenarios. In a bullish scenario, the positive AI narrative and strong overall market help buyers push through the $520 to $525 resistance area on strong volume. This would likely lead to a test of $535. A breakout above the range high would signal a resumption of the primary uptrend, targeting new all-time highs. I'd place the probability of this happening in the near term at around 50%, pending broader market cooperation. In a bearish scenario, the antitrust concerns continue to weigh on the stock, and we break below the key $511.68 support. This would likely lead to a quick test of the critical $500 support level. A failure to hold $500 would be a significant technical breakdown, potentially starting a much deeper correction toward the $430s to fill that old earnings gap. Given the recent weakness, I'd also place the probability of this scenario at around 50%. The stock is truly at a balanced inflection point. Things to watch for will be the next earnings report, which will be a huge catalyst, and any definitive news regarding the OpenAI antitrust case. Ultimately, Microsoft is coiled in this tightening range, and a significant, decisive move is likely on the horizon. To wrap up, please remember that this is not financial advice. The content in this video is for informational and educational purposes only. Always do your own research and consult with a qualified financial advisor before making any investment decisions. Trading and investing involve significant risk, and you could lose money. Thanks for watching Explain the Charts, and we'll see you in the next one.